I want to bring up my next guest because he says we need to pay attention to Dimon's warning. SlateStone Wealth, their chief market strategist, Kenny Polcari. So listen, they had the lowest target last year. They got the lowest target this year. I know they're worried, but how do you invest in that when
you don't? That's just the problem, because what he actually said was, it's going to crack, we're going to break down, it's going to happen 6 months or 6 years, I'm not sure when. So my question was, how do you invest in that environment? You can't. And to your point, I think Jamie Dimon's great. I think he's done a great job with JP Morgan, but he tends to err on the side of being rather negative sometimes, right? And so it's difficult for an investor to kind of take that news, because then on the next day, Morgan Stanley came out and they said 10-year rates are going to 2 3/4, and Jamie Dimon said they're going to 5%. So what's an investor supposed to do between the two? Yeah,
and they're looking for a skyrocketing inflation over the next three weeks or 3 months, rather, I think. I want to talk about this market, right? Yep. Because I like them. You watch the market closely. We watch the market closely. Last 3 sessions are intriguing, right? We opened down each day, went down and finished higher. Every day the last 3 sessions, looks like we'll do it again today. You look at that, then you also consider the breadth of the market, right? Even today, we're going to bring up all the different factors, the nuances of the market.
Right.
So much green, some deep green down here, small value, it feels like this market is broadening out.
It's definitely broadening out, and I think that's actually the positive. What investors should realize is that it's not as anxious or scary as JP Morgan, Jamie Dimon made it sound, or some other people on the street are making it sound. Yeah, there are concerns out there. You and I both know it. It's trade. It's kind of the uncertainty around trade. But broadly, the U.S. economy is functioning okay. The hard data remains strong, and it remains robust in my mind, right?
Speaking of robust, you had a robust discussion. I think it was on Maria's show about the Fed. And you were like, hey, listen, no cuts. The Fed shouldn't be cutting. Boston came out today, says maybe 1 rate cut, but it feels like the Fed is leaning more toward your camp right now.
I don't see how they can cut rates. I don't think anything is screaming that they should cut rates. And in fact, Bostic, he goes on both sides of the fence. One day he says, yeah, we're going to get 1 or 2. And then the next week he goes, well, I don't think we're going to get any. I had an argument with Grant Cardone on Maria.
Right. That's what I saw.
Not an argument. It was a conversation. But he was arguing that the Fed needs to cut rates to help the housing market. I say, are you nuts? He can't do that. Housing actually needs to come down. So rates should probably stay where they are.
All right, let's talk about some stock picks. One you like is L3 Harris. We've got the chart here. Beautiful chart. Like a lot of these charts, it's looking really good. Maybe on the relative strength, a little overbought short term.
Right. But we just added this to our GARP strategy, right? Growth at a reasonable price. But this is actually a really interesting name, right? In the defense space. It kind of plays in that same space. You know that private equity company everyone's talking about, Anduril? Right. So that's private equity. You can't get into it at the moment, right? But LHX is kind of in that same space, mission critical, drone technology, which is really fascinating. If you saw that article about China sending over a bunch of drones and containers, and one day they're just going to let them run.
Well, we saw what happened with Ukraine and Russia. That was mind-boggling. That'll go down in history books.
100%. So LHX is kind of one of those defense stocks. And look, there's a bunch of them. Could be Raytheon, could be Lockheed Martin. We just happen to add this one to our GARP strategy. So that's the space.
You like CrowdStrike, right? And I want to do 2 things. First of all, it's breaking out. It looks beautiful on the charts. But I will add this as you explain why you like it. The last 3 times they reported, for a week, the stock got hammered afterwards. Here's the last 3 times. But before that, it exploded. You like it going into earnings tonight.
I like it, but I like it because we like the name, we own the name, and it's a great name in the space that it's in, right? But you have to be careful, because this is one of those names, to your point. I think the options market is pricing an 8 to 10% move in either direction. If they beat, it's going up 8%. If they miss, or if the market assumes it's got negative news, it's going to go down 10%, right? So I'm in the camp that if they miss, I'd be a buyer on the way down.
Got you.
I'm not going to chase it because we already own it. But it's also, to your point, it was breaking out.
Kenny Polcari, my man.
Always a pleasure.
Same here.